Hey everybody, good afternoon. Happy Friday. Hope you had a great week. Ready for a good weekend? Market was completely and absurdly sideways again, day after day after day. I'm going to go into a more detailed market analysis. But first, let's talk about how we did today. Um, and we had a good day. I noticed that Lee took a whole lot of trades. I'm guessing he was trying to make $100 a contract. Usually he's trying to do something when he trades that much, right, Lee? So 11 wins, one loss, and he did make $87 a contract. He had one decent sized loss earlier in the morning. I too had a loss today. I went 7 wins, one loss. And just again, to put that in perspective, my daily goal is between $25 and $30 a contract. With 40 contracts traded, that's $1,400. That's not bad. In Lee's case, with 20 contracts, $1,700 day. So he just continues to nail it day after day after day. And I broke down the trades for you. I think all but maybe the last one. Let's go SPY. Yeah, I may have not gotten that last one. Maybe even last two. But you'll get the idea. So remember, he kind of takes the morning shift. I come in later. I come in at 8 a.m. usually, a little bit earlier. So my first trade was a short, and you can see I entered on the 8:15 a.m. candle. You can see the short signal came at 8:14, sorry, and this is about as textbook as it gets. Short signal followed by a dramatic drop in the chop index. And when you catch these, you can be in and out in one candle with a decent profit. Remember, we're scalpers. We would rather take, 5, 6, 7, 8 trades a day at, $5 to $10 per trade than we would try to get one home run during the day. My second trade was a bullish trade, and similar idea, but the long signal had gotten kind of old, and I was looking for it to clear these wicks. Remember, they always have to clear the highest wick, and so this is the one that it cleared, and probably wouldn't have been a terrible place to go in. In fact, even the candle before had a good drop off and chop, but that's what we look for right there. We already had the long signal and we were breaking out, and I was in and out in 2 candles with a decent win. Then I had a loss right here. It was a short trade. I got in. Everything looked really good, by the way. If I were guilty of anything, it was maybe waiting too long. I could have gone in sooner. Even 1 bar would have been profitable. And I will say, I did not have an official exit sign. I chose to exit this one. Had I stayed with it, it would have been incredibly profitable. But still, when I saw a blue candle and I was already down like 6 or 7 cents, I decided to exit it, and I ended up with a loss of about 8 here. So not bad. It was a bummer though. I take every loss like, ugh. Then we're still on this short signal. And now for me to re-enter, I'm looking for it to break below the most recent resistance, which is right here. This is where I ended up having to exit. So this time it broke out at 921. I think I have that in the wrong place. I know for sure I do. Because I know that chop dropped a ton when I went in. I wouldn't have gone in with that picture. I'd go in with this picture every day, all day. So this one, I had the short signal already. Then I was waiting for it to break. It broke. And then I was waiting for the drop and chop. I got it in and out 1 candle. Decent little gain. It happened again. We had the short signal up here, and I'm waiting for it to clear this most recent wick, which was all the way down here. So legitimately, I could have gone in here. Here, I didn't like the drop and chop. Here, I liked it. Got in and out, same candle. And again, that's the beauty of timing these as scalpers. I'm not taking much market risk. We're talking seconds or minutes, and we're out. And we rarely lose. I think you're seeing that. I don't know when our last losing day was. I really don't. Here's another good example. We had the short signal way back here. So I'm looking to clear this point of resistance or support here. And so I'm not sure why I went in so late on this one, because you could see the exit. It broke this little mini resistance level here with a massive drop and chop. For some reason, I waited, but still in and out, one candle, decent gain. And next, we went bullish. So you can see, even on a flat day, we were able to trade both directions very successfully. Long signal came here, and it came when the chop dropped. I could have gone in here. All I needed to do was clear this resistance here, and it did on this candle. So this really probably would have been the one to go in. I waited one more just for confirmation. I don't mind missing the first half of a move. I'm looking for the meat of the move. And here it was, in and out, 2 candles, nice profit. I think I have one more on the books here. Maybe 2 more. Let's see. Well, yeah, let's just see what I might be missing. 1235, 1253 to 1255. You can see how many I'm in and out, same candle. This was 1055. So my last trade was 1153 to 1155. So I think I meant 1253, right? Or maybe not. Let's see. I don't know. Sorry, guys. Cold meds. Oops. Yes, I did mean 1252. Getting Lee's confused with mine. No, 1153 to 1155. That was the deal. So 1153. Oh, I have that one already. Okay, so we got them all. That was my last trade of the day. So pretty good. Lee did better. He traded a lot today. Morning started off a little slow, but you can see our system works, and it will deliver these wins all day, every day, to infinity. There is no limit to the amount of wins that the system will deliver once you understand it. And it's not that hard to understand. Okay, let's kind of fade into a market recap here. So to begin with, let me go up to SPX, day chart, auto. Okay, so this is what we had. We closed almost exactly where we opened for the second day in a row. This is not normal. This is four doji-ish candles. 5 out of the last 6 had wicks on both top and bottom. This is a highly confused market that could go either way at any moment. And this white line is 4150-ish. Every time we touch that, you should be prepared for it to sell. This is exactly 4150 right here, this white line. And you can see this red band here. This is what we call a supply zone. This is where people come up here and they market their shares. Here you go. I don't want them anymore. This is too high for me. And these numbers always will correlate pretty well with dark pulls and whatnot. And we'll take a look at that now. Let's start here, actually. So we talked about max pain a little bit. Max pain is a point at which if the price expires at that level, it's going to cause the most pain for the dealers and for the retail traders. And so we had this max pain level of 410 that I'd been watching all week. And you can see that the gamma exposure just kept falling like a rock. This is historically a very bearish thing to have happen. And it happened in a big way. So I'm not surprised we're stuck here around 410, 411. It makes perfect sense to me. Dealer hedging, they're hedging bullish, meaning they've sold there's a lot of puts out there. They're trying to be delta neutral. If a dealer sells a negative trade to a trader, he needs to buy a positive trade on the same security. So this is how they're doing that. A lot of people look at this, they think the market should be going up. No, it should be going down, and actually that it hasn't been, and yet the dealers keep hedging for worse. That should make you a little bit nervous. It makes me a little bit nervous. And then the last thing is just the overall flow during the day. You can see all day long the options flow just kept getting darker and darker and darker. Very bad. But then you can see later in the afternoon you had a divergence here. These are worth paying attention to because 9 times out of 10 it's going to be the price that moves down to the options flow number. Okay, so, and this, it changed, so I'm not going to talk about that anymore. And then we have just really drilling down and looking at what's happening with SPY. You can see the trends. They're just getting more and more bearish. You can see these red dots are not necessarily bearish, but they're very likely bearish. This is massive dark pulls. It just kept hitting over and over and over at 411.60. I mean, billions, literally billions. Before that, it was 412.25. So the only way to really know what's going on is to look and see what's happening with the price. We can look at 412.25 and 411.50 just to get an idea. Okay, so 411.50, way up. Oh, that's where we closed. Well, that's very telling, and you can see this red band. So it looks to me like it got really out of its own. Market got over its skis here. So I don't know if I feel very good about Monday. And then the other level was 412.60, I believe, or 412.25. And I already have this level there. This was a really key level going back for quite some time. When I study kind of the macro levels. So there is going to be a draw up here. So if we get through here, just think about this for Monday. If we break through here, it's extremely bullish because it came through all these dark pulls. And if it blows through it, then you know those dark pulls were bullish, not bearish. Till then, we're guessing. And then there'll be one hell of a pull up here to 412.23. So market probably will remain sideways, and all of the ammo and everything points at a little bit more bearish than sideways. So this is a heat score. This is the algorithm determining how important each of these option purchases are. And these are really big, big numbers, these heat scores. I want you to look and see how many calls do you see? Very, very few. And these golden sweeps are really important. And this is a pretty good size one. And this was 20 million. So bearish, bearish, bearish. A lot of people thinking bearish. And this guy, this was a puts that expired today, and he went in this morning at 10 a.m. And clearly he made money because the spot price was 413.27 at the time. We closed at about, I think, 411.50. So he killed it on this trade. This one doesn't expire until July, so it's not quite as interesting. But you still want to watch these levels because they will come back. There's always going to be a story there. I think that's enough for now. Oh, no, I'm sorry. Big money. Big money is all over the place. You can see the big money index is trying to level off here, which could be a good sign. Too soon for me to buy it. It's been a choppy mess. And you can see here the big money has been leaning toward selling still a lot. This is definitely a more selling trend. I would rate this as bearish. And then last but not least, our time cycle data is more bearish than anything. I'm going to get to the end of the day charts here. Come on. This video is already too slow. Okay, that's enough. I don't know what's happening. This is this morning's, and you can see that magenta line usually is going to be the big driver. And it will ultimately pull the white line. Magenta line is midterm and white line is long term. So you have both pointing down. This isn't pointing down much, but it's pointing down. That's extremely bearish. You have the NASDAQ is the only one that looks somewhat positive, and you can see here that it's in the upper reversal zone. It can't go higher than 100, which means it has to reverse. The magenta is trying to turn up. So this may be bullish, but it's not going to be bullish for long. You're going to see chop. And last but not least, this is a horrible picture. Magenta's going down, and now the long-term market is beginning to turn down, and that hasn't happened in a long time. So this is all bearish-ish. Okay, so I don't have high hopes for Friday. Saturday, but just remember, anything can happen. The market is just all over the place. That's why we like the style that we trade. We don't care what it does as long as it does something. And the more of something it does, the better we do, of course. Okay, that's it. Thanks a lot. Have a